Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is August 5th. Yep, it's already August 2017 edition of Market Outlook. So, boy, do we have a mixed picture. August is always a iffy month. So, let's get into the details right away. I'm going to try to make this relatively short as we get into our summer months. And first thing I want to note is our new risk on, risk off gauge. Look what's happened. A month ago, we flagged a bull pattern and markets did indeed rally. Last week, things deteriorated. Like I mentioned last week in the video, not enough to generate a sell signal, but look what's happened now. We've completely deteriorated, and I'll get into what are those components in our risk off view. But as you can see, all of our risk off, risk on gauges are now turned negative. So let's take a look at those gauges and see what they're showing and why we've got this negative reading. So the first and a major component is looking at the SPY versus utility. And you can see that this particular indicator is showing a deterioration under the black line here, which is our sort of monthly view on things, where the S&P relative to utilities deteriorating. And of course, utilities is the conservative play. It's also now failed on a 6-month basis as well. So even as the market's basically sitting right at highs, interesting deterioration. Let's take a look at some more key ratios and how stocks are performing relative to other asset classes. So if you compare it to bonds, you've got a similar scenario here where you've got bonds also trading under our 20-day or 1-month indicator here, looking at the difference. And so as you can see, the S&P underperforming bonds as well. Bonds definitely a more conservative play, and we're hovering just above, and we did bounce off our 6-month reading. Now, of more concern, high yield debt versus bonds definitely flipped negative. And not only did it flip negative, but it went beyond not only the 20-month indication, 20-week indication, but also the 6-month. Also, what's interesting to note is the S&P still underperforming when benchmarked against gold. So gold anxiety index, you don't want to see that outperforming the S&P. And in this particular case, you can see with the red, that's the actual ratio. Spiders definitely underperforming GLD. And also looking at wood, which is really a good ETF measuring housing and overall economic activity, definitely weakening against the gold as well. So all of our key risk on, risk off indicators definitely deteriorated to sell territory. So that is certainly something important to note. So looking at the particular indices, let's see what's setting up. And first thing you can see right now, of course, is sideways action, right? This is now going on for virtually a month in the S&P, right? And you can see sideways action. We did manage to close above the 50-day moving average, but really important support comes in right around the 6-month calendar range, which is really the 246 level and just under this spike low right here, right? So this big bearish engulfing pattern hasn't resolved itself. That's why I said these patterns in 3 of the 4 indices are intact. So you've got sort of this compression zone being highlighted or bracketed by the high of that day and the low, and that low coincides with the 6-month calendar range. Now, same scenario exactly with the Qs. market has not resolved itself, and the Qs really have to hold around 142.50 to 60 level. That's important. But in this particular case, you can see we're trading under the 10-day moving average. Now, in terms of IWM, right, we really have negative action here. We failed at the upper end of that channel. We now are trading under not only the 10-day, but under the 50 in a warning phase. So any move back up and above the 50-day moving average, along with the inside day pattern here as well, would be a positive. So interesting setups across the board. The one exception, look at the strength here on our real motion momentum indicators. The Dow really strong, just powering up, and that is related to the value versus growth theme. So if we take a look, and we're going to drill down now into the premium section in Big View, and we haven't actually really released it, but what's really interesting is let's take a look at value stocks versus growth stocks. So here you have the key, our triple play indicator, looking at value versus growth, and as you can see, that red, the actual ratio number, has moved above the black line, and we have this sort of double bottom. And in actuality, the bigger trend really has been down in value stocks versus growth, but it looks like to me we've got a really interesting possible bottoming pattern here, which means that value stocks are really starting to power up. And you can see that playing out in the indices as well, where there's this big pause in NASDAQ, even though on an absolute basis it's very strong in terms of absolute year-to-date performance. On the NASDAQ stocks, the NASDAQ 100, sideways action, massive engulfing pattern, but not the case in the Dow. So there's the big theme, big cap value stocks, which are in that Dow index or the Dow components. Definitely you can see bottoming, and we can get much higher from here. It could really mean the end of a big trend that has favored growth over value. Now, with that, let's take a look at the volume patterns here as well. So in terms of, let's take a look at a different tab here. So we go into volume analysis, and you can see just what's happening. So real money is flowing out of everything but value and growth. So taking a look, you can see the diamonds, right, over the last week up 1%. But even more importantly, look at the volume pattern here. 5 accumulation days, right? And meanwhile, NASDAQ has got more distribution than accumulation. So that shows a real shift. And it's clear from looking at the price action that of what I just showed you as well. So there's the overall synopsis. So you can see short-term pattern definitely looking iffy in 3 out of the 4 indices. Now again, price action here is going to determine what's going to happen. It always does. Looking at all of these other factors, you can see between volume patterns, between the move or the sideways action and compression in 3 of the 4 indices, not able to make any headway over the last 3 to 4 weeks, definitely suspect. And with our gauges showing risk off, more weight here is to be on the lookout for at least some sort of a correction in the month of August. All right, that's it for now. Hope this helps. Have a great summer weekend and see you next week.